Hello and welcome to Pro Traders Strategies Market Commentary for Unenjoyment Friday. Yes, it is Friday, October the 5th, and my name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Please remember that past performance in any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with the economic data. I mentioned Unenjoyment Friday. That's what we used to call the unemployment data for the first Friday of every month, as long as they have time to compile it, which they did in this case. But let's start out with across the pond. We got European, German factory orders coming in at 2%, expected to be 0.7%. We got German PPI month over month coming in at 0.2%, expected, or sorry, 0.3%, expected to be 0.2%. Then back over here to the United States, we got our average hourly earnings came in at 0.3%, expected to be 0.2%. They did revise, or sorry, that was in line with expectations, but they did revise last month's number down from 0.4 to 0.3. Now, non-farm employment change came in at 134,000 hires, expected to be 185,000 hires. So a miss by about 50,000 on that one. But the revision from last month's number, 207 hires to 270,000 hires, that makes up for the difference that we saw on this one, albeit it did miss. It could get revised as well, and the revision really making up for that number as well. Also, the unemployment rate came in at 3.7%, expected to be 3.8%. Also, the lowest reading since 1969 on that number. So very near full employment for the most part. We also have Bostic speaking, who can't help but hear himself talk. And that's about it for the most part. On to the overall markets. Let's talk about crude oil. Man, it got below that 78 Fibonacci level yesterday. I thought we were home free for those of us who are bearish. And then late afternoon pop with the overall equities when they were falling out of bed. We got a little bit of push, and mostly because it was a flight to safety for the most part. Then we got the gold futures are moving higher a little bit today by about $4 on the day. That being said, a little bit of flight to safety there, but we are above 1,200 right now. The bulls want to keep it there. Bitcoin, flatlining. I'd have to say that if I were going to lean one way or the other, I'd have to say Bitcoin's to the bearish side. Bonds continuing to slide. That being said, probably because we saw good economic data there, and the theory would be that interest rates are going to continue to rise. Having said that, when we see that kind of it, right now we're seeing little tantrums from the equities in that they don't want to see interest rate hikes. They want that free, easy money. So when they start seeing the interest rate hike get played in, they really start slamming down on the equities, which is in turn driving the VIX higher. Good for us, especially heading into earnings season. That gives us even more inflated prices on these premiums. I haven't been able to find very many premium selling strategies right now with this high implied volatility because we are so close to expiration in the front month, and then that next month has a lot of those earnings in it. So I'm kind of staying away from that right now and sticking with my low volatility strategies, expecting those volatilities to expand heading into earnings and or with anything else going on in the overall markets. But VIX up into the teens again, 15 is the handle. We've got the Dow Jones Industrial Average off by about 150 points, right on this 50 Fibonacci extension. A settlement below that would be very bearish. As a matter of fact, I would think it would have to come down and test the 50-day moving average, lining up with that value area high as we get a little overextended here. So that would be where I would expect the correction to come, especially if we break below that 50 Fibonacci. Right now, NASDAQ below that its own 61 Fibonacci extension, where I did those from that big pullback back in May and April. That we are breaking that support level right now. Again, finished below that, very bearish to the value area high, just like in the E-mini Dow Jones Industrial Average. E-mini S&Ps isn't really finding that right now, but it's 50-day moving average coinciding with the 68 Fibonacci. Now, usually the extensions I make in yellow or gold, whatever color you want to call it. And that being said, I haven't done that with this one. It is the extension, so those are going to act as support. But if we see the other ones peeling through that easily, then we might see the E-mini S&Ps do the same. This is what I was talking about yesterday afternoon. Almost as soon as I got done with the daily market commentary, we were right around here. We just got the free fall all the way into the close. Now, we did see some buying back as the shorts started to cover overnight. Pretty wild ride for an overnight move, as you can see here, juking back and around. This rally was off of the good economic data we saw, but then all of a sudden the bonds started saying, hey, we're going to start pricing in some higher interest rates. That made the equities really start to fall out of bed. And with that being said, I talked about I didn't add any short delta type strategies to my portfolio. And the reason why I did that, because I can't find it, I didn't selling premium strategies where I'm selling volatility, because a lot of those ones that I was looking to sell the volatility in have the earnings coming up, which doesn't really work with my strategies. Therefore, I went with one of the ones we kind of vetted yesterday in the webinar for the long put spread. And XRT has great pricing for the downside and for this strategy. I went through all the rules. It fits all the rules to a T. As a matter of fact, it is a super green light, so I decided to go with it, despite the fact that it is right up against the 50 Fibonacci extension. That should act as support, but I'm looking for this market to peel through that today. Hopefully we can get some sell-off there. Having said that, I did the D's, and I bought the 52 puts in there, sold the 45 puts in there, so it's $7 wide. I paid $3.25. So I'm looking for that market to come down, test the 45 handle, or look for that increase in my profit potential, or my increase in my premiums there. So about $4.10 or $4.25 is where I'm looking to get out. And that's about it for today. Check out that webinar from yesterday. It's great, especially when we expect volatility to expand, or we're getting an expansion in volatility, which we are right now. So that should help us out with this strategy. And I go through all the rules, how to set that up, what kind of volatility you need, what kind of situation you need to be in order to set up this particular strategy for any individual underlying. All right, so check that out. That's about it for today. I hope everybody has a great weekend. Also, give me a thumbs up, thumbs down, like or dislike. If you give me a dislike, let me know what I'm doing wrong. And other than that, have a great weekend, and can't take that, take it easy.